From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 29th, 2016. I hope you had a great weekend and are ready to get started with trading for this week. In today's video, I am going to do a general overview of each of the major U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. First off, important to note, this week's news calendar is much more active than last week's. We have quite a bit of news going throughout the week. Not really anything during the first part of the week during the U.S. trading session today, but as we get into the evening times, Eastern U.S. time today, we have the news starts to pick up. We have several pieces of data out of Australia. Probably most importantly, the RBA rate statement coming up at 10:30 p.m. Eastern U.S. time this evening. So that'll be interesting depending on where you are in the world, what time that hits for you, but you'll want to pay attention to that. And as we go through each of the days this week, we have significant news going all the way even into Friday with U.S. non-farm payrolls. So quite a bit more active than last week's news calendar. Let's jump right into it. Let's start on the NZDUSD New Zealand dollar versus the US dollar. This currency pair, we have a trade still going active from late last week. Taking a sell as the market rallied into resistance at the top of our wide range that we've been discussing here in the daily videos and the live trade room. Took a sell last week right around the 67.40 level. Current market sitting right around 65.90, so we're sitting about 140, 145 pips of profit on the trade currently. We've seen even a little bit more than that as the day started today. So definitely watching for new opportunities to go in the same direction that we are going in. I often get that question, when do you add on or scale into a trade? And we discussed this a little bit in the trade room last week about scaling into a trade, but looking basically for new parameters to get into a new trade basically becomes the reason to scale into a trade. Let's zoom in a little bit here more on the daily time frame. Again, our sell, for the current sell that we're holding, is all the way up here at the pink shaded area. We discussed the fact that we wanted it to break underneath the orange shaded area, which was our hinge point within the range inside the blue box. The next goal was for it to break down underneath the yellow shaded area and the bottom of our range. And guess what it's done today? It's now pushed underneath the range. The question, of course, is, will it stay under there? We've seen it underneath here before. Take a look back here in time. Throughout the time frame of this blue box in this range, we've seen it underneath the 6,600 level before. So we need it to stay under 6,600 today. We need it to stay underneath that yellow shaded area. If it does, then we have a higher expectation that it's going to continue to pressure lower. The first stop, first place for it to go would be down here 65.45, 65.20. That's the green shaded area, becomes our next targeted level. You can go back in time and see the support here and resistance back here on the left hand side. That becomes our next potential target on the way back down. Then we look for it to head on back down here towards the blue shaded area all the way down here into the 6,400. So those become your next potential support targets. Currently, resistance at the yellow shaded area, and as long as it stays underneath there, and again, the 6,600 level, I think that's what we want to focus our energies and efforts on. If it breaks back above the yellow zone, there's a good possibility we take a turn back up towards the orange shaded area. Why? Because that's what it's done historically, so we don't have to look too hard for that. Down to the 4-hour time frame, zoom it out one time, two times here. You can see we're underneath that yellow zone. That becomes your opportunity for the day today. So if you're looking for a trade first thing this week, sell underneath 6,600. The yellow shaded area becomes your opportunity. Your stop loss is above it. You don't want it to break the yellow shaded area. You're looking at 65.95 to 66.15. So it's about a 20 pip zone highlighted in yellow. Risk is fairly low. Your target, of course, is the green shaded area. So if you're looking for a sell first part of this week, adding on to the position or initial first sell anywhere between 66.95, 66.15 on the New Zealand dollar, selling, targeting the green or the blue shaded area on the way down. Your risk is above it. Currently, the trade that I have going on now, I have a hard stop loss sitting right here, right around the 66.40 level, just above the yellow zone. So the trade from the pink zone is locked in profit. Can't lose on it. Stop loss is around the 66.40 level, which might be a pretty decent area to place your stop loss if you get into it freshly here into the yellow shaded area today for the New Zealand dollar. Moving on down the line here, let's go over here to the Australian dollar. Like I said, we have a lot of news, even not just today with the RBA rate statement, but going throughout the week, we have a lot of news on the calendar out of Australia. Pay attention to that. Watch for reactions to that news as you go through the week this week. Weekly time frame, of course, we've been studying the long-term downtrend. Zoom it in here on the weekly time frame a couple of times, and you can see what's been happening over the past several weeks. We've tried a couple of attempts higher, and then it fell back down. Late last week, we actually took a sell here on the Australian dollar into the yellow shaded area. I sold it a couple of times last week here into the yellow shaded area. Profit made as it went down to the orange and then to the blue shaded area. So decent opportunity selling the yellow shaded area last week. For today, we're underneath the orange shaded area. If you zoom it in one more time here on the daily time frame, you can see we're underneath this orange shaded area. That is 7170. Let's call it 7170, 7190. That's the orange shaded area. You can see historical resistance here. Gives us a clue to resistance now. Support here gives us a clue to resistance now between 7170, 7190. So as long as it stays underneath there, that could become your opportunity to go short. Under the blue zone, target the green zone, and of course under the green zone, look for it to continue that bearish movement all the way down here in towards the 7,000 range. Above 7190, 7200, another challenge back up here towards the mid to upper 72s. The yellow shaded area becomes something to watch as it takes a turn higher. If it breaks above that, of course, we'll likely look for it to continue that upside pressure. So watch that RBA news today and the rest of the Australian news as we go through the week, and even U.S. news could give you a hint or clue to direction here for this pair. 4-hour time frame, again, we can see it underneath that orange zone. That becomes your opportunity for the day today under the orange zone. Then we look for it to get under the blue shaded area, 7115, 7130. Then we'll look for it to target back down here towards the green shaded area. That's all in the downside. Upside, I don't think you really want to buy this likely until or unless it breaks back above the 7200 level, back above the orange zone. That maybe gives you a clue of a turn back up here towards the yellow shaded area. So buyers right now probably sitting on the sidelines until it gets back above this period of congestion right here before you would look for a new buying opportunity on the Australian dollar. USDJPY, US dollar versus Japanese yen, downtrend, nothing really new there. We've been talking about that for several weeks. Zooming in a couple of times, we saw the double tap down here towards 111. Take a look. 1, 2 times down here towards 111. We've been talking about clues and potential reversal from the double bottom down here for the US yen. We need to see higher lows and higher highs begin to develop here for this currency pair. With that, I would suspect that now we're looking at the market looking at support here, 112.40 to 112. We'll just call it 112.40 to 112.40 pip zone highlighted in green. That becomes your next area for support. We're just back underneath the orange shaded area, so I'm a little bit cautious about going long at the current moment. Let's take it on down to the 4-hour time frame. Again, we're just back underneath. Let me zoom in one more time. We're just back underneath that orange shaded area, so going long right now just doesn't make sense as long as it sits underneath the 113.20.45 level, the orange shaded area. If you're looking to go long, you probably need to settle back down here, support back down into the try to get this yellow shaded area pulled over for us into the green shaded areas where you're going to be looking for buying opportunities if you're looking for that right now on the yen. So under the orange zone, don't buy it. If it touches the green zone, potential buys. If you're looking for shorting opportunities because of the longer term trend, it's possible that you're looking for that here into the orange shaded area. Just watch for the breakout back above 113.45. The next target is back up here towards the yellow shaded area. I don't really have any significant suggestion here. We're in kind of the midst of a little consolidation pattern. If you just take a trend line from on the highs here, let me change the color of that so it makes it easier to see. Let's make it this red color. So you see that red trend line coming down from the highs. So as long as it's underneath that, I don't really think that it's a good time to buy it unless it dips down into the green zone or lower. Selling it right now, again, we're very close to the multi-year low. We have the double or month low. We have the double bottom down here. So selling it right now also a little bit questionable. I think I'll wait for some more clear clues here on the US yen this week. Take it over here to the US CAD. We've been studying the trend pattern in the live trade room. Couple of different trends that we first off want to recognize. The blue trend line is something to consider here. The long-term blue trend line, 100 period moving average floating right along that blue trend line as well. So definitely something interesting that you'll want to watch here as you go through this week. The blue trend line, 100 period moving average. Today and this week so far, we are underneath it. You can see last week we pushed underneath it. Today we're underneath it. So as long as it stays underneath the 100 period moving average and trend line, there's the possibility of a continuation lower. We're definitely going to continue to watch the oil prices have been continuing to influence this currency pair as well, so we'll continue to watch that. If we start to see another significant drop in oil, we definitely would watch for the continuation back higher. Again, here's the trend pattern of the current downtrend. The black boxes, 1, 2, 3, 4 times we were in congestion, ranging, breakout, and lower. Now here we are again. Congestion area beginning to develop, only the very beginning stages at the yellow shaded area. Again, 1, 2, 3, 4 times. Selling resistance. If you're looking to go short because of the downtrend pattern, wait for it to go to the top of the black box. That's what we did. That's what you have here, 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 and here. Wait for it to go up into the top of the black box before you would go short or sell this currency pair. So I think you're looking at support right around the 35.40 level. Let's go ahead and zoom it on down to the 4-hour time frame. We know our trend pattern. We can see the support right around the 35.40 level. If you're going to go short, to me, it makes more sense with the pattern of the trend to wait for it to go back up to the pink shaded area. Again, look at that pattern here. The yellow zone fall, pink, blue zone fall, green zone fall, orange zone fall. Now it needs to go back up to the pink zone, 36.70, 37.20 before I would consider this a new selling opportunity. Oh, or the next thing that we would look for is a daily open and close underneath 35.40. So sellers, if you're going to sell it, let it go up before it goes down or break through the support barrier on the daily time frame. If you're going to buy this pair, watch for clues to support, reversal, and again, keeping an eye on those oil prices for the US CAD. GBPUSD, Great British Pound versus the US dollar, it's a bear market, it's a seller's market. That's the only thing that you should be concentrating here for the GBPUSD. No indications, evidence, or clues, or really any reason to go long here for the GBPUSD. So with that being said, let's zoom in a couple of times on the daily. Take a look. 1, 2, 3 days inside this blue shaded area, the double red trend lines here, we're underneath that today. So that becomes your selling opportunity. If you're looking to go short, the blue zone is the spot to go short this week. And you're going to target back down here. I have a couple of lines down here, 37.70 down to 1.3700. 37.70, 3700, the two green lines. Those are our next targets lower that we zoom back in time and studied last week in the live trade room. 37.70 down to 1.3700 are your next targets lower. If you're shorting down towards that, the blue zone, 38.70 up to 1.3913 is the blue zone, and that becomes your selling opportunity for the GBPUSD. 4-hour time frame, nothing really surprising and new here on the 4-hour. You see it holding underneath that blue zone today. So that's your potential opportunity, 38.70 to 39.15 or so. Sell underneath there, target down into the 3700s. Your risk, of course, is that it breaks back above the blue shaded area. You know what the risk is. You know what the potential target is down to the green line. So sell it under the blue zone, target the green lines. If it breaks the blue zone, get out of it because it's likely going to make another retracement higher. Definitely watching US data this week also for the GBP/USD. Euro dollar continuing our march back down here into the euro. We see it continuing to pressure lower. This week we're underneath this green trend line. We studied the green trend line. We studied the 100 period moving average here. Last week there was significant reasonable expectation that we would look for support here. We had the 100 period moving average. That's right here, right in the middle of the orange shaded area. Historical resistance back here. Long-term green trend line there. Significant reason to expect maybe some support here into the orange shaded area. In fact, last week I took a buy into that orange shaded area looking for a bounce higher. Saw a little bounce here and then just broke right on through it. So that was the risk that we had last week, and now it just continues to pressure lower. Now that we're underneath it, I don't think that there's any reason to go long. It's only selling here for this currency pair. Underneath the 109.30, 109.55 level becomes the orange shaded area becomes your opportunity to go short. Don't go short into the yellow zone. Selling at the lowest point is not ever a good idea. 4-hour time frame. Again, the orange shaded area becomes your opportunity for resistance for the day today. You've already seen it here into that orange shaded area. Now we're falling down here into the yellow shaded area. Again, if you're going to sell it, you need it to go up before it goes down. Don't sell it into support. No reason to buy this currency pair. No evidence or clues to reversal right now. The evidence was above the long-term trend line and moving average. So as long as it's underneath it, I think you're looking for sells on rallies or breakthroughs on support for the euro dollar today. And lastly, moving over to the U.S. franc, just the opposite. We see it pushing above the 100 period moving average. We continue to pressure higher. It is interesting today that you take Fibonacci last high down to the low of this long red trend that you see right here, or long downward fall that you see here. Fibonacci high to low 618 sits at 1.0027. Well, that's pretty much where we're holding as resistance for the day today. So it'll need to get through there. It needs to get through this little area of congestion right here. You see the red circle over here on the left-hand side of the chart? I can also put another circle right about right here. You see these areas of congestion? I'm going to make this one a blue color. So you see the blue circle, you see the red circle. There's a significant congestion between the pink and the green shaded areas. So I think it needs to get through that if we're going to see any significant movement higher. And that would mean a break above 1.0, likely a break above the parity level, and actually the mid 1.0050 to 70 level becomes a better idea for the continuation back up towards the 1.1s here for the US franc. Underneath this congestion where you see the blue circle and the red circle, means there could be some resistance, even as high as 1.0050 and 70 here for the U.S. franc. Take it on down to the 4-hour time frame. We're seeing the attempt to break above parity currently. Let's zoom it in one more time here. That pink shaded area right here, right smack in the middle of it, is the 1.0 parity level. So if we're going to see it continue and pressure higher, we need it to stay above that. And right now it's just a challenge. It's a test of this level. I consider a breakout and open and close. So we just are seeing a challenge and test of it. Because who's to say by the end of this candle it's not back underneath that pink shaded area and the parity level. So again, I think it needs to stay above here. If it can, opens and closes, stays above 1.0, then again, I do think we're going to continue to see pressures higher into the mid to upper 1.0050, 70 level. On back underneath the 99.95 level, underneath the parity level, we could even see it come right on back down here towards this 99.50, 99.15 level, the green shaded area underneath. So either way you look at it, the pink shaded area parity level will be your hinge point this week. Above it, we continue to pressure that upside. Below it, we go back down into lower support levels for the U.S. franc this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.